All right, all right, all right. So you already know how I'm going to start this off, guys. What's up, guys? Welcome to another exactly. Welcome to another Sunday webinar. I'm gonna go ahead and share my screen because today what we're gonna do is we're gonna go over trendline exit, one of my favorite exits. I'm also gonna break down what levels you're gonna use this on for the best trendline exits. Now, one thing I know about trendline exit is you can use this pretty much on any level, but the best ones happen on level 1 drops, level 2 drops. If you played on level 3, sometimes you will come out with break even or just up about 10 pips. So we'll definitely get on that as well too. But before we even go into trendline exit, we got to also understand the TDI. So what I'm going to do is I'm going to go ahead and draw out the TDI real quick for y'all. So we have the oversold and we have the overbought lines, which are right here. And we have the 50 right here. So I want y'all to post into the chats right now because for some reason I don't remember what these lines are. So what is the green line? The RSI. Perfect. I need to see it from everybody. What is the green line? All right, so we're going to draw the green line on here. So it's the RSI. All right, guys, what is the red line? The TSI. So guys, so tell me, what is the RSI line? Like, what is that? What does that show? I say this all the time. Great job. It shows where price closes. The reason why we love the RSI line is because that's where it shows the divergence, because the candles don't actually show you where price closes. That's where that's where trendline traders get stopped out on, because they start drawing lines on the charts, not knowing that the candles are not showing where the price actually really closes. And that's where you got to look at RSI. It doesn't get faked out. The MACD gets faked out by pins and all that stuff. It gets faked out. That's why we don't use the MACD. Now, the RSI line doesn't. It actually goes until when the price closes. When it actually paints, that's when it's done. When it paints. So, guys, what is the yellow line? Actually, no. Before we even say the yellow line, what does the TSI stand for? Great job, Brendan. It's an EMA. It shows that the 15 is in sync with the 1 hour, or the 1 hour is in sync with the 4 hour, or the 4 hours in sync with the daily, or the daily is in sync with these, and so on and so forth. It shows that for at this split moment of time, they're showing the same direction. All right. Now, on top of that, what is the yellow? Oh, that's definitely not yellow line. What is the yellow line? It's the liquid market baseline, or the liquid 50. Guys, the liquid 50 is exactly like the stationary 50. It's just moving with the TSI and moving with the RSI, showing more in depth and more on the middle. Basically, how am I going to explain this? Showing where price actually really is on an uptrend or a downtrend. So therefore, if you have the liquid and the stationary on the top half, when the stationary actually stays in the same place, it's showing that it's actually an uptrend. All right, so cool. We now know what these things are. So what are you looking for? Oh, wait, hold on, guys. Let's go to the next one. What are the blue lines? The VB lines, the volatility bands. Guys, when it bunches together, it's showing prices in consolidation. And when it explodes, it means they have moved. So therefore, if you see the RSI leave out of the volatility bands, what is that called? That is called a shark fin. Great job. Great job. Guys, if you see the TSI after the RSI is out of the VB line, what is that called if the TSI is near the VB lines? Yep, perfect. Shark fin, blood in the water, guys. Now, guys, the reason why I'm going over this again is so that you can understand trend line exit. Because when there's a shark fin, blood in the water, there's also going to be a second hit to that high or to that low, and this starts the VB, not VB, but the trend line exit. All right. So let me go ahead and get this illustration up so that y'all can see it. Okay, so what you're looking for is, let's make some VB lines. All right. You're looking for the shark fin, and you see how it's inside the band? If you ever heard me say inside the band, outside the band. All right? Every time that they pull back, even if it's divergent, it will stay in line of the trend on the RSI line. Let me go ahead and put the rest of this real quick. I totally probably got this backwards, but oh wow. All right, so guys, we have the liquid, we have the stationary here. Now what's gonna happen is we have the shark fin. This is the shark fin right here. It's gonna come out of the volatility bands, which I'm pretty sure y'all have already seen. The next hit you're looking for is the second leg MRW. This is the second leg MRW. This is going to be the shift. When it crosses through the liquid 50, that is the shift. This shift should happen either a little bit before or on when the shift candle appears. Let me say that again for somebody that missed that. This shift shows that this is going to be a downtrend. This shift needs to happen at the same time or a little bit before the shift candle happens. Guys, if this shift does not happen and it throws a shift candle, you're going to get faked out. It's going to bounce right back up and you're going to get faked out. Do I need to say that one more time? Let me know if I need to say that one more time. Because that's really, you need to write this stuff down. If this shift on the market, the liquid market baseline happens at the same time the shift candle presents or a little bit before, it is playable because it has crossed into the lower half of the 50. If it has happened after, not even after, if it has happened, it didn't even happen, and there's a shift candle, you do not play, Charles. If they did not break through the 50 and they caused the shift candle, you see the arrow percents on your candles. To remember, I've already said this in the beginning, the RSI shows where price closes. So why are you even going off of just a candle? Oh, somebody just hit you with that. Dab on them 2 times. You see what I'm saying here is, guys, we're going off of the candles. We shouldn't be doing that. We're going to show where price actually really closes, and that's why we use them together. So, guys, you do not take the shift if it only happens on the candles first and it does not present on the TSI at the same time. If it breaks through the TSI, not TSI, but the liquid market 50, and then on the candles, it hasn't shifted yet, you can still play that because it's already showing that it's already breaking through. It's showing price is closing. Guys, whenever you see outside the band, inside the band, it's showing that price is actually closing lower than the candles are showing. It's actually showing that they're trapping hardcore traders. People thinking that it's going to be a buy because they're looking at just the candles. But in reality, they're closing lower. Something's happening. So guys, this is where the trend line exit happens, all right? You're going to take a straight line from the shark fin to the next hump or the pullback, and you're gonna draw it all the way down. Now, it's not gonna always be super crazy perfect, but you're waiting for them to bust that line. You're waiting for them to take the RSI and come, hold up. You're waiting for them to take the RSI and to bust through it. When they bust through it, the trend line is over. Now we have the shark fin down here, we have the second hump here, and now we're making another trend line here. Ooh. Guys, it's a really easy thing to play. It's a really easy thing to see. You just got to follow it because a lot of people get freaked out on these pullbacks. These pullbacks are also going to help you because you understand what signature entry, the sauce. Because when the sauce presents here and you already entered up here, you already know good and well that it's going to continue to keep dropping. Not only did you get a second entry here, you're also waiting for the trend line to collapse, to break, so that you could exit. So guys, before we even get into ADR, let's go ahead and look at some of the charts and everything. Freddie? All right, so prime example. Oh, snap, Freddie, thank you. Thank you. Freddie already got one on the page already. So what do we see here, guys? We see these shark fin. Let me know if you see my annotation. Do you see my annotation of the line? Give me a thumbs up, Messina. Thank you so much. All right, so what do we see here? We see the shark fin. It's everything that I've already showed you right now. They bust through the TSI, they come through, but notice that there's no shift here as well too at the same time. So this is not the shift. And we also know not to play that. Why? Because it's only one leg. We don't play first leg. We don't play first leg, and it's because of this reason. They come back right up here. They do not take out the high, and they create the second leg here, causing the trend line exit. Notice all these hits, Messina. They hit the line. They came down. They hit the same line again. Notice they pulled back and hit the line again and rejected it. How many of y'all see that? Your exit would have been here. You're done. Your exit would have been here. If you needed to, you could have went to the 5-minute to see it. Your exit would have been there. It could have been just straight here. Your entry would have been here. First entry would have been there. And your exit would have been there. Which means you would have got over 50 pips if you would have followed your exit. Some of y'all would have got all the way here and then pulled back and you would have cried. You would have cried. All right, let's go see if we get another one. Let's just find one. All right, here's one right here. Oh, you already did it. Here we go. So here we have your entry here. Your exit would have been there. This is so that you get your confidence back on letting it ride. You're going to win no matter what. Now, how you feel is you're like, oh man, but I missed out on all these pips. If you wasn't paying attention to the VB collapse, which we're not obviously talking about that today, we're talking about the trend line exit, you still would have made it out on top because you had two exits here, Messina. You see you got two exits here? You got two exits here. Some of y'all are not even letting it get to one exit. Be honest. By raising hand, how many of y'all are not letting it get to one exit? You're just pulling out. Be honest. I mean, which is good because you're getting your profit. But then again, you're hurting yourself because you're like, man, I should have stayed longer. And then all of a sudden you get into a bad trade and then you stay longer. What? I don't get it. Some of y'all be letting bad trades go for 30 pips, but then don't even want your main trade to go 30 pips. I don't get it. I don't get it. Can somebody explain that? You'll be up 40 pips and let it go all the way back to break even, then go negative 10 pips, which is 50 pips negative in all from your position. You'll let it do that, but you won't let you get 50 pips though. We got to fix that, guys. All right, let's find another one. So you're going off the first two hits. First two hits. Because like even here, boom. We got a vector out of the box here. They shift it here. They gave you so many different trades here. Boom, they gave you so many different trades. It dropped down here, which you could have obviously got trend line, VB collapse, but we're not talking about that right now. Your trend line exit would have been right here. So which means you would at least walked out with how many pips? How many pips is that? It looks like around, good God, still 31 pips. And that's the last exit. You already had like 3 exits here. You had the VB collapse, you had the ketchup collapse, and the trend line exit. But you done pulled out here. Y'all see where I'm going here? Y'all pulled out, you pulled out here. Tony, they pulled out here. They just seen it shoot down there like, oh, snap. I'm out, I'm pulling out. Then all of a sudden they dropped down here. Then they said, oh, snap, it dropped a lot. Then they end up getting in late here, and then it pulls back. No more, guys. No more. That's 3 exits here. That's exit here, and exit here. Trendline exit always got your back. Trendline exit doesn't give you the most pips, but it always got your back. And sometimes trendline exit will drop even more. That's why I said the best ones are level 1 and level 2 drops. This is obviously in consolidation right here. Trendline exit will either give you the most pips or the least pips, but it'll always give you pips. Always give you pips. Let's find another one. All right, so here we have bounce off the blueberry. We already know that's going up. They shot through the blueberry the previous day, came back, pull back, 50-50 bounce for a continuation. Come on. Oh, my God. We have this right here. Boom. Perfect right there. Because you could actually ride the trend here, or you can actually take the line and go straight through across as well too, which would have been here. It just depends on your preference. Me, I'm the type, I would go here and make the line, oh, it's an ugly line. Because I would go from the peak. Boom. And so therefore it rode on here, which means my exit would have been somewhere right around here. Which obviously, come on, we already know we would have pulled out by now. They done held that for so long. We would have been good. Oh, snap, actually, ooh. That would have been, which is good because you would have been good both ways. You see, y'all see that? You'd have been good both exits there. But that's the reason why I want y'all, oh my God, it's 100 pips. But that's the reason why I want to show y'all that is because even if you did it the way that Freddie had right there, which is still right. You could do that. You could do it that way too. You can also do it for the long way as well too, and it's still going to give you pips. It's always going to give you pips. On an uptrend, you're going to always put your trend line at the bottom. On a downtrend, you're going to put your trend line at the top. I'm filling in the letters. Freddie, you know you're zoomed in, right? I don't know if Freddie knows. I just know it's 1897, 98. Tradesway Live. All right, so for an uptrend, you're going to always have your trend line at the bottom. On a downtrend, you're going to always have your trend line at the top. I need you to say this with me. If it's an uptrend, where does it go? It goes at the top. No, I'm just messing with y'all. Are you serious? I had my camera off the whole time? Oh my God, nobody told me. Guys, if it's at the if it's a downtrend, where's the trend lines? Okay, perfect, perfect, perfect. All right, guys, now we're gonna go into the next section. We're gonna go in on ADR. Now, guys, we already have an amazing thing that counts our ADR. I really don't want to go into details on how to make your own ADR, which is so difficult because you got to do it from the monthly, the weekly, and all that stuff like that. All right. So Fulvio said, "How are you able to tell when the both shift candles appeared on the market baseline, red line cross? It doesn't go off the red line cross. It only goes off of the RSI, which is the green line crossing the yellow line, which is the liquid market baseline at the same time of the shift or a little bit before." All right, so let me explain this real quick. All right, you can have an M like this, and it goes up like that. On your TDI, it can show this. Shark fin, bounce, I'm only going to draw the RSI. Now, because it did not at this point, not this point, I'm sorry. Because at this point, it did not shift. You didn't see any shift candle. Or it could have shifted. It's fine. But if you've seen them stop right here and hit a wall, as they created a big candle right here, you would have thought they would have busted through, but they didn't. You better best believe they're going to bounce that junk back up. And that's what causes them to do this stuff. And then guess what? Now you got super crazy divergent, and actually this is the peak now. And then you got it divergent. Are you? Did you get that, Fulvio? Perfect. So that's why you got to wait for this shift to either happen first or at the same time that it shifts down. If this thing goes at the same time, shifts all the way through right here, then your entry would be right there as the shift candle presented, which would this whole thing would be the candle. All right, so guys, the next thing we're gonna go over is ADR and how powerful ADR is. You gotta understand this. Guys, the best thing to do is to draw some boxes. You have your ADR range of the Asian range, which is in the boxes already presented on your charts. If you have to, when it busts out of the box, take another box and put that color on top. And if you have to, as you're in the trade, figure out how many pips is down here is the range of where you're going to stop. So let me go ahead and put this in perspective for y'all. We have the range, which is here, showing the average daily range for the, not average, but the ADR range, so wrong. The Asian range, I'm sorry, guys. Right here, and what are we looking for? Them to go into the orange box. Now we have them shooting to the orange box, bouncing here, throwing some vectors, boom. Then they create the M, they shift, throw some saws, second level drop, third level drop. So guys, you gotta understand this. This is the Asian range, which would be 28 pips. If you guys know that the average daily range, which is on the right side of your chart, is 100 pips, and you know that this blue box is obviously bigger than the orange box, and you know that a stop hunt is 25 to 50 pips, how much is the orange box? If it was going to be perfect, how much is the orange box? Wrong. Wrong. How much is the orange box? We got to start thinking, guys. We got to start thinking and doing these numbers. If the average range in the Asian range, not average, but the Asian range is 28 pips. Thank you, Cedric. 20 freaking 2. One of my favorite trades ever. 22 pips is here because we know the average stop hunt is how many pips, guys? The average stop hunt is 25 to 50 pips. So if you already know they're at 28, actually it's the average, I think, no, the average, yeah, it's 25 to 50 pips. So this right here, that means that they have 22 pips to go. Now, does that mean, Freddie, that they have to go a full 22? No, that means they can stop here if they want to. But you know that they have 22 pips to go. This is something that you need to think of when you are, of course, trading. If you see the average range is at 38, you know that there's an extra 12 pips they can go. So stop trying to take that vector inside the box. Do the numbers. So if you know that this is 50 pips combined and the average daily range is 50, guess how much this box is? 50 pips. So that means if you got in on the shift here, you also got in on the sauce, which is here, for 2 positions. You took this for 25 pips. You would have stopped here. 25 pips. You would have stopped there. Your 50 pips would have been done before you even hit the 50 box. If you had 1 position, your 50 pips would have stopped here. Come on, guys. Count pips. If y'all notice in the chat, so when I trade and everything, I'd be like, oh man, what's the ADR? How far did they go? How many pips? Okay, cool. What level how many pips did they go from the high? Because you know you want to trade away from the peak. Even in intraday, you're still trading away from the peak. That's why we're trading vectors, the false move, because it creates the peak. Yes, yeah, Freddie, go ahead and share it. Let me go ahead and, yeah, go ahead and share it. Thank you, Freddie. Boom. Oh, Freddie, that's a perfect stop hunt. Look, it's exactly 50 pips. Yo, so Ben, I'm over here doing this session right now, and he finds one just like that, exactly 50 pips. Stop hunt, perfect. It's just, huh? No, he's like showing on the charts. I'm just like exactly what I was just drawing. I was just drawing it out. I'm just like, they do it over and over and over. Even look at the next day, 25 to 50 pips stop hunt to BTS. Count pips. 31 pips there, 19 pips there, average stop hunt. Because some of y'all are literally looking for those big giant vectors, but the thing already went 39 pips. So Joe, they're not giving up too much. Because remember, every time that they make a new low, it costs them money. They're in the game to make money. So not only are you knowing about your ADR here, you got the trend line exit happening here as well too, which will be right about here, straight through here, off of the first 2 humps, which means you would have been exiting right here, which you would have grabbed 50 pips. Yep. Now you could have made it go further, but I wouldn't chance that because there's no real good defined inside the band hit. So go off of the 2 hits here, which is right here, and that small one right there, which creates the W here, and the shift. And then you also know your rules on the shift. Guys, there's so many rules we have, you just got to follow it. One thing that stuck with me, I was talking to Joe, and he was like, one of the biggest problems he had was he started to try to create new stuff on top of it. And we get like that sometimes. We try to make shortcuts. Guys, I've been there too. I'm the one teaching. I've been there too, where I'm just tired and I'm like, let me just create a little quick shortcut. Like the sauce didn't get here in one day. It took me a year of back testing to even get it. So guys, follow your steps. So guys, your homework for this week is we're going to do the ADR boxes again. So on all of your homework that you're naturally already doing, I need to see those ADR boxes added onto your stuff. We're going to do about 15 of those this week. And then on top of that, I need to see some trend line exits on all of your charts. I don't care what you're doing. I need to see trend line exits on them. Vectors, everything, level, not so much for levels. Not so much on 4-hour chart. If you're doing anything around vectors, if you're doing 50-50 bounces, I need to see some trend line exits. That's what I need. All right, I don't need to see it from just a couple people. I need to see it from everybody. For everybody who be in my inbox saying, oh my God, I want to be great, but I can go and look up your name and only find out you only did 40 charts for a whole year. Yeah. Somebody's guilty. Mm-hmm. And Varen would tell y'all, if y'all don't believe me, go ask Varen. I kicked Varen out of the group. I kicked him out. And I was like, remember that, Joe? I was like, you're out. I was like, I even told Varen, I was like, yo, Varen, I'm going to send you back your money. He's like, no. He was like, I said, you ain't taking this serious. I was like, you're not saying you're taking this serious. And then me and Varen, we go back. We went to high school together. We graduated, stuff like that. Like, yeah, we went back to high school. And I'm like, no, you're not going to be doing this, bro. Yeah, we close like that, but I'm not, you get the same treatment or even a little bit worse. But he hit me up and he was like, yo, why am I not progressing like everybody else? And I was like, Varen, I just looked up your name. You did 3 charts in the last 6 months. And then he was like, but I know this stuff more than everybody. You still only did 3 charts. And he's like, well, I did my charts, but I just didn't turn them in. I was like, that's even more stupider because I can't grade it. I can't tell you what you're doing wrong. So you could be creating a bad habit. And then he turned in some homework. And Joe, remember that? It was the worst homework I've ever seen in VKU history. It was so bad. And he was doing that for 6 months, just like that. So I tell y'all to turn in homework because now since he's been turning in homework and he got really good at it to the point where he was teaching other people and helping them, he had his first 4-figure day a couple weeks ago. He's already flipped $100 to $5,000 a couple times already because he created that good habit. And that's what the homework is here because I know some people would just like, oh my God, I'm so sick of this homework. Guys, this homework's going to make you money. You're going to see stuff and be like, oh my God, I've seen this so many times. You market makers, you think you slick. You think you slick. I know exactly where this is going. I marked this 46 times. So guys, I need y'all to get on it. So guys, I need this homework from everybody. So appreciate y'all. So I'm going to go ahead and open the floor. Any questions before we hop on, before we kick off this week? Know what you're looking for. Make sure y'all study up on the blue waves. Towards the blue, continuation is true. Away from the blue, it's going to come back to you. So make sure you freshen up on your stuff. Any questions out there before we hop off? Also, guys, bear with me on uploading this video. Each video takes almost 5 hours to freaking upload here. Yeah. So bear with me. Okay, the volatility bands is built kind of like the Bollinger Band. I said Bollinger Bears. Bollinger Bands, but it has a different algorithm to it. And basically when it squeezes, when it is small, it shows when consolidation happens. And when it explodes, it's basically showing that there's high movement in the market. All right. Brandon said, do blue waves work every week, every level? I missed most of that webinar. If you missed most of that webinar, then you need to go check your back office and watch it because you'll see. Question, just because it's away from the blue coming back to you, does it mean reversal is coming? It means a reversal is coming, but does it mean that it's going to go all the way back to the blue? That's the hard part because it is, of course, counter trend, and counter trend is not what we do. One of the biggest things about coming back to the blue is being cautious about your counter trend trading. If you're going to counter trend trade, know ins and out. Me, I counter trend trade more than I trend trade. I know that's a bad thing to say in front of y'all, is because that's what I do. Like, it's just, I know how many pips I can catch, and I've done it so many times, and I know the ins and outs. And of course, I'm not gonna lie, guys, trendline exit is the best for 50-50 bounce. 50-50 bounce on BTS is a counter trend. Yes, it's a counter trend. Yes, said. But I do not want y'all to counter trend trade because y'all are not on that level yet. But of course, when you get to that level, you trade both ways. So I counter trend and then I trade with the trend. When you do get that level, it's really fun. It's really fun because you can literally trade anything. Yes, you can use trend. I use trendline exit all the time on counter trend. All the time. Sometimes I will get use VB collapse before it happens, but the trend line exit is your bay. It's right there for you. It's the last step before it actually shows you that, you know what, the move is done. The move is done. I'm out now. I'm gonna grab my 20 pips. I'm gonna grab my 50 pips. I'm gonna grab my 40. I'm gonna grab my So yeah, guys, appreciate y'all hopping on. If y'all enjoyed this webinar, you already know, blow up the chats for all the people that are out there sleeping. Until next time, see y'all in the chats. Talk to y'all soon.